Good morning, everybody. This is Diamond Hands Dave. Welcome to the Trading Lab, and it is a fresh one. A little bit of a recap coming out of last week. It was a bit rough. Had a few losses. Had to stomach, quite a bit of blowing up accounts and stuff. But we're back. We're doing it, and we're trying to improve every day. So right now, overnight, we saw a huge flush. Actually, not overnight, but after trading yesterday, huge flush down into 70s and the 60s. 60s failed, not even any sort of demand there. Finally came to 52.50, and now we have reversed off of 52.50, so that's probably going to be a major level later on. Anyways, have not taken a trade yet, although I did take a couple trades off stream. Both losers. It was just whipsaw action in this range right here, so nothing too exciting. Just gonna wait for the setup, gonna be patient, and right now the setup is I want to reclaim a 52.72 because, as you can see, this is where we tried to break out from, and we could not do it yet, so we are holding out for that. And aside from that, we're just going to chill. So hope everyone's having a good day, having a good Thursday. And let's get into it. Could also give you a little bit of market analysis while we wait for a setup. All of May has been, most of May has been just consolidation. We were coming off the April rally. This is about where so May 15th. So we did rally a little bit in the beginning of May. Coming off that rally. So what really started all this, I'll show you, is this giant bull flag that we had been building since March. It's probably too big to see, but I don't want to go on a 4-hour right now. So as you can see, this is a giant bull flag. Take my word for it. I'll show you why not show you the 4-hour? Yup, right here. So you can see ever since October of last year, we have just been going up, and then finally we got to high of like 53.30s, 35, 34. And then the downtrend started. So this is essentially what is going on out there. So we essentially just started downtrending. So you could see ES was kind of building this nice downwards channel pattern. So essentially a bull flag, which is a downwards pattern after a rally. So you got the flag pull right here. You got this downward channel right here that makes the flag. So considered the bull flag. Hello, my friend. Hello, Christian. Hope you're having a wonderful Thursday, my friend. So then we came down here, and then on May 5th, we actually broke this downwards channel out. And that's actually what started this rally. So you have the bull flag, you have the flag pull right here, you have the downwards channel, and then we broke out. After being in a sustained downward flag structure like this for, I think, a month and a half, something like that, the breakout of the structure will produce pretty aggressive rallies. My mentor says that month-long consolidations or month-long channels can produce month-long rallies. So makes no surprise why we've been rallying so far. Although we did get to the top right at 53.47-ish, and then we've kind of flattened out there, and now we're going back down. It's looking... Honestly, I'm not trying to predict here. I'm just kind of giving you guys a structure as what it looks right now. We're consolidating even further after this rally to make another bull flag. And so we've made that bull flag. And the bull flag failed, and then we reclaimed it, so now it was reactivated, but now we failed it again. So it looks like a couple things. We either continue going lower and test, I don't know what this level is. Hold on, let me try to get this trend line right here. Can I get that trend line? Let me get this trend line, yes. Right. And that's about right. Okay. So either we continue going lower because we also broke this this core pink channel, core rising pink channel, and that is at 52.71.75. We broke that yesterday evening. We're trying to reclaim back above it. Who knows if we do? But if we cannot, we will continue going all the way down, potentially until 51.80s to 51.90s. Now, there is a spot, there's a breakout spot from this bull flag right here, and that is at 52.15. Where are we at? Where's the 30s? Around like 52, yeah, 52.30. So that's the support of this other consolidation right here. So when you're looking at structures and you're looking to see like where price may go next, you want to see like prior structure supports and resistances, okay? Because those are very actionable. Like especially the breakout of certain structures can be actionable on the back test. So for this bull flag structure here, I think this is from May 9th to the 13th or 14th, we built another structure. So the resistance of that structure is 52.62, which we've actually tested and failed. Now support of that structure is around 52.33 to 36. So that is the next level down that we will test if we cannot get above that 72 level today. If that fails, we go on back to 52.17, 52.17, 52.04, 05-ish, and then we'll test like one, and then 95, and then 88 or 80s. So these are the levels that we'll have to test or back test, because these are breakouts. So we'll back test all these levels. Again, if those levels fail, the ultimate level at this point, or the two ultimate levels at this point, will be again around 82 to 202, and if those fail, the big kahuna at 51.56. So those are going to be the levels of interest that we're looking at. We want to see how price reacts to those levels, especially right now where we have essentially downtrended. And there's nothing wrong with that. The market has to correct. The market has to essentially digest and like correct for the rally that's been done, and vice versa. The market has to correct and consolidate for the sells that we've been having. All mode 1 price action, mode 1 being up or down, like you have a sustained trend in the upside or the downside, that's considered mode 1. Those are very short-lived. Mode 1 trend tends to be very, very short-lived, and it only happens about 10% of the time. The other 20%, or sorry, the other 80 or 90% is chop, or consolidation, or sideways action, or whatever you want to call it. Building structure. Building structure is one of the main things that mode 2 does. So when you're building a structure, there's no follow through. You're going up maybe a little bit, going down a little bit, but there's no like sustained upward or downward move. And so when you're in a mode 2 situation, which we are right now, after a little bit of a mode 1 right here. So last night we had mode 1, and then we're going into mode 2, this consolidation. I wouldn't even necessarily call this a failed breakdown, to be honest, because 5250 is not a major level. Although it double bottomed here, it may, like I said, it may become a major level later on, but I would not call this a major level. Right now, that's why I haven't taken a trade yet, because we are in mode 2 consolidation. We are building structure, and it's very hard pressed to tell whether it's going to break to the upside or to the downside. That's why you'll see a lot of, especially new traders, whenever they see any little move, like right here, oh, we're selling off. Oh my gosh, get short. Get short, you're going to get trapped. Okay, if it goes above this line, oh, you go long, you're going to get trapped. You're going to get trapped in either direction. So, and that's the thing a lot of new traders don't understand, is that when you're building mode 2 and you're building structure, you cannot bank on there being any follow through. At least not in, there's no time frame, but at least when it's building structure, you don't want to get in because you're going to get chopped. And honestly, this may be a session where I don't take a trade, just because of the mode 2 consolidation. Go figure. But I would rather wait. What would I rather wait on? Couple things. I'd rather wait for these double bottoms to get run. So basically the fail of 5250. So we've already tested this zone twice. I'd want to break below 5250, so I'd probably short around 49 or 48 with my target of 52.36 to 33. These are major levels. So if I'm going to get short here, I'm going to completely get out either at or before the test of 36. Because again, this is a major breakout level, or breakout point from the structure back on... What structure was this? So from the structure back on May 10th to May 14th. So this was the support of that structure. Now again, you can kind of tell it kind of looked like maybe another bull flag. It's fine. I mean, that's why we have these levels here, but these have already been tested. Thank you. And so now we have to test the structure, the support of this structure. So this is technically not even a breakout back test, because we've already back tested the breakout, and the back test of this breakout clearly does not seem to be holding right now. So again, the next level down will be the support of the structure, which is right here, 36 and 33. If that fails, again, we have the breakout of the next structure, which is 52.13. Okay, so we're just waiting to back test all these breakout points. And again, if the breakout back test here fails, we have other supports right here, 95 and 87, like we mentioned earlier, which is the support of this structure. Again, if we fail at that, the breakout of this structure right here, 55, which also coincides with this uptrend line that actually saved us back here. So this blue trend line, this is the April low right here. This is like what, 48, 49, 85. This blue trend line kept testing multiple times, but as you can see, we started to uptrend after testing this line multiple times, and now we finally broke out of it. This trend line allowed us not only to bounce off of the trend lines and break these levels, but it also allowed us to break out the downward channel. So that's a major level. It's a level that caused a huge reaction. So these are the things you want to pay attention to. So again, if these fail, if 36, 33 fails, we'll test 13. If 13 fails, we will test the support of the next structure, which is 96 and 87. And then if those fail, we will test 55, which is the breakout of this structure right here, breakout of the downward channel, and also coincides with the blue uptrending with the blue uptrending line. So is it possible that we get down to those major levels? Yes, it is possible. It is possible that we don't. Yes, anything's possible. But we have to trade what we see. We cannot trade on a whim. Although a lot of us do. I'm going to be honest. I'm guilty of it myself. There's a lot of times where I do trade on a whim. My discipline's out the window. My plan's out the window. I think I see something and I take it, even though it's not part of the plan. and then you just get into trouble. Again, I'm still learning as well, like you guys. Trading is a forever learning process. You know, there's not gonna be one day where all of a sudden, oh, it clicks. You know, I mean, there will be days where like things are easier for you, but like this just takes time. So, my friend, how's your day going? How's the live account going? Yeah. Oh no. Can't you get refunded for one of them? I would probably just get refunded. Well, I think you hold on. I think if you have if you have Tradeovate, here, let me show you. If you have Tradeovate and you buy the real-time data for Tradeovate, there's add-ons. And I'm hard-pressed to think that there wouldn't be any add-ons for you. Here, let me show you. Sorry, give me a second. Go log in. Okay. So once you log into Tradeovate, so you should have this, select a trading mode, just hit launch. It says simulation because I'm on a prop account. Again, this is potentially different from having a live account. You did the add-on. In order to, is it possible I need both? No, you shouldn't, because again, so like if you go to the add-ons, then this is, let's say like I've already bought Tradeovate, blah, blah, blah. You click activate for TradingView add-on. You should not need to buy TradingView data if you have Tradeovate. Make sense? Because you're logging in to Tradeovate. You're logging into TradingView from your Tradeovate account. So, like, if you take your Tradeovate credentials and you log into TradingView, you don't need data for TradingView if you already have an active Tradeovate account. Does that make sense? So I don't know why you got charged both. I would see if you can get... I would see if you could get refunded the TradingView account, the TradingView data, because you don't need TradingView data if you have Tradeovate. So, yeah, I don't think you need both, man. That doesn't make sense. Again, if you have an active Tradeovate account, there's no reason you would need data with TradingView, you know? All right. Oh. Oh, I see, I see. Okay, that makes sense. Click on the subscription. Where's subscription? Oh, here it is. Yeah, so I have Essential. I have it till June 17th, so... I mean, $10 is still not that bad. Oh, subscriptions on Tradeovate. Alright, so launch. Subscription. Subscriptions. Yeah, so it's Apex monthly paid, so I don't get charged. I don't get charged via Tradeovate, because Apex gives this to me for free. And then they give me the data, the CME bundle, $12 per month. It's free essentially for me. Again, this is kind of also why, like, trading a prop account has its benefits. It's like you don't realize you have all these extra costs that you incur with a live account. And like I said, Apex is running $18 a month for the 50K. It's crazy. So for me, I guess it's free. But yeah, I mean, if you have a live account, which I have a live account as well, I actually did have to pay for the data for that one. The CME bundle, yeah, the 12 per month, yeah. Sorry about that, bruv. But hey, if you're trading well, you make that back in no time. So you're talking about $22 a month? But see, so do you not have the add-on if you have a live Tradeovate account? Then I paid for the annual TradingView subscription. But that's when, oh, to get the Essential or the Premium Plus. Yeah, I got it. That makes sense. All right. How's your trading going? I would love a stream from you, by the way. We could do a stream collab. my headphones. Wow. Dude, that's crazy. That's crazy how they charge you to connect the two. Even though on the prop firms, they give it to you for free. Actually, you get a lot of stuff for free with the prop firm. So you paid $10 to connect Tradevate and TradingView. You paid the yearly subscription for TradingView, which is $215. On top of that, you paid $84 for data. And you're paying $10 and $12 on Tradevate per month. I mean, yeah, that... I feel like it's kind of ridiculous, man. That's... I don't... Again, I don't know if you needed all that. But again, the way I'm doing my live account, the way I'm doing it with my live account is I opened up a NinjaTrader account, which is actually very similar to Tradevate. It's almost like copy and paste of Tradevate. And I took that account, put it into my NinjaTrader platform where I have the copy trader, and then I linked one of my prop accounts to my live account so I can copy trade them both, meaning I can still trade off of TradingView and then have that copy to my live account. So that way I don't have to pay for any additional... I mean, I still have to pay the market data for the market data on NinjaTrader because that's how I activate the live account. But aside from that, I didn't have to do anything else because I already had TradingView. So NinjaTrader bought trade. Yeah, so that's what it is. That's why they look very similar. But thanks, man. Yeah, trade copying has been a game changer. But again, when you trade copy, you really have to have your discipline and everything on point. Because you can make big rewards, but there's also big risks. I don't think that $84 is necessary, man. I would really look into that. Because again, if you paid the $215 annual fee, why do you need the $84? Shouldn't that come with the $215? So I'll just double check that. But regardless, great to have you on the stream, my friend. Yeah, I mean, if I had... Gotta make it back. Yeah. So I actually... With what I'm doing, that's how I'm bypassing that connection fee, the $10, and well, one, you can't even connect NinjaTrader to TradingView, so that's one. And two, even though I'm paying for like I have to pay for the data for NinjaTrader. I still get it free on, well, not free, but I'm getting it free through Apex. But I still have to pay for the trading view, like the essential. Which again, actually, then maybe it doesn't. Maybe because maybe the what you pay for trading view for a plan like essential, premium, or plus, maybe that doesn't include data. Because if I'm getting data free through Apex, but I'm still paying like the whatever a month for essential or premium, then it probably doesn't get included. I think you're just paying for the platform. So it could be that the platform is one price and data is another price. I would double check still. Again, it just doesn't make sense to me if you have a Tradevate account and you're already paying for data on the Tradevate account, why you would need to pay for data on the TradingView account. Like, even if like you already paid for the yearly subscription for TradingView and you have data on Tradevate and you have a live account with Tradevate, again, that's what I'm thinking. Like, that add-on, you turn that add-on, you pay $10, but after paying all that, you still have to pay $84 for data on TradingView? Shouldn't that just be carried over from Tradevate? That's what I don't understand. Yeah, I mean, you're going to make it back. No worries, man. We're all going to make it back. Virtual fist bump. It's been kind of a slow week last week. I'm sure you heard about it. I got thrown off the horse, or thrown off the bull, so to speak. But we're trying to get back on. And so far, so good. I have my arsenal ready to fire, but I'm waiting for the right time. Tell me about your progress, bruv. Yeah, slow week for sure. I haven't seen too many good setups on my end either. Yeah. My slump started with Nvidia last week. But again, I'm not blaming the events. It's definitely a me issue, a discipline issue. But we're learning from it. That's all you can do, right? You learn and you move on. You take the lesson, no matter how hard the lesson is, and you just keep going. That's the thing about trading. It's like you just have to keep going. And actually, me for one, I am very blessed to have the strength to continue. A lot of people don't. A lot of people quit after a few months or a year or whatever, if they make it that long, and they can't see the value. They can't see the value because here's the thing. Trading does promise you big reward. I'm not going to lie. That no one can deny that. Trading can provide big reward. But the other thing that a lot of people don't realize is it's not just about the money. And as a matter of fact, the money is not the main purpose for trade. Like, yes, everyone trades to make money. That is why people get into trading. However, the purpose of trading is not just to make money. The purpose of trading is actually for self-development and self-improvement. What do I mean? We all have, so none of us are born with discipline. As a matter of fact, we're all born with the innate characteristics of greed, FOMO, and that's for survival, right? Those are like survival instincts. So when you're doing something that, number one, has no limits, has no rules, or at least no rules for how to trade. There are rules, of course, there's margin requirements and things like that, but I'm talking about once you're in the market, there are no rules. So you can get in and out of a trade whenever you want. You can put as much size as you want. And no one's going to tell you otherwise. But that's the problem. It's like when you go in, if as a human you go in with the innate ability, like let's say you were just born, okay? Like, yeah, you can walk and talk and you just get into the markets, you're going to get wrecked because your innate abilities are going to overcome your logical thinking. So your greed, your FOMO, just the wanting to do and wanting to get more is going to overtake you. So over time, and actually that's the one thing that a lot of people can't get over, is that when they get in, they take a trade, they're up on the trade, they can't just take their profits and get out. They have to hold on because they think they're going to hit it big, and they think it's going to be a one and done, and their life is going to be made in one trade. That's never the case. It can be if you know what you're doing, but most new traders, that's what happens, and then they expect those same results. And then when they go back in expecting the same thing and it doesn't happen, they get turned off. They're like, oh, the market's rigged, oh, blah, blah, blah. They're always blaming external factors, okay? External factors. And that's the beauty about trading. Trading is literally a mirror. I mean, not literally, but it is a mirror. So whatever you're putting in, that's what you're getting back, okay? The market doesn't care about your emotions. The market doesn't care that you think it's rigged. The market doesn't care about any of that stuff. So really, and again, it's different from having a a job where you go in and talk to people, meet people. It's different from relationships. It's different from anything, because there's always a personal side to the equation. Well, if you're working, your boss says something to you like, oh, she doesn't understand me, blah, blah, blah. You can put you can really explain it away. You can really justify why something happened to you in that setting. But in trading, there's no justification. Why? Because the other people on the other side of your trades don't know you. They've never met you. They don't care. And it's not to say a cold-hearted, they don't actually care about you. It just means they're not thinking about you. They're not out to get you. You are not the market's interest, okay? Us collectively as retail traders is the market's interest, but you individually is not the market's interest. So, and that's how you have to look at it. It's there's no one's insulting you. No one's trying to get back at you. And that's the big thing a lot of new traders can't get over. They think it's personal, they think it's rigged, they think it's against them, blah, 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 and they stop. But what it's supposed to do, if you have the right mindset, you look at trading as an opportunity, as something to build your wealth. To build your wealth, yes, and to build your self-development. And that's actually the main purpose. Yeah, and you should. That is the main purpose because that's how you develop as a person. There's nobody accountable for me except for me, okay? I am the only person that's accountable for me. Now, again, at a job, in a restaurant, not restaurant, but like in a job or in a relationship or anything else, yes, there could be accountability shifted to other people's and other factors, okay? But in trading, the only accountability is me, is myself, okay? And so I have to look at that. And I have to ask myself, am I trading responsibly? I have a set of rules. Now, I've created a set of rules for myself because the market is not going to make rules for me. The market's going to eat me alive if I don't make my own rules, okay? And that's the beauty about trading. It's like you can make your own rules. You're not like, yeah, trading is you versus you. Exactly. It's not just, like, again, I'm making my own rules. The market isn't making me any rules. Now, you can trade as if there is no rules, because there isn't. You can trade and do whatever, you're going to lose 100%. So the market, through my self-development, has allowed me to create personal rules for myself to be able to trade this, okay? And then once I have those rules, I can see what my performance is like. Is my performance good? Is it bad? Is it stagnating? What's happening? And I can measure that. And how do you measure that? By journaling, okay? So that's the beautiful thing about the market, is that it's on your own time, on your own rules, and you are your own boss. That's literally what it is. You are your own boss. No one's talking back at you. No one's out to get you. No one's gonna prefer someone else over you. Like, there's no favoritism in the market. There's only you and the market conditions. That is it. And your mindset. So if you can get your mindset right, if you can implement self-development and work on yourself, because that's actually what trading is. You could learn technical analysis, you could learn how to chart, you could learn Fibonacci's, you could learn, standard deviations, MACDs, RSI, you could learn all of that. And all that stuff is great. I'm not saying it's not. It is good. They can be helpful. Notice I said can be helpful. But really what it comes down to, if there's one thing you need to learn about the markets, is learn about yourself. That's how you get better at the markets. If you can learn about yourself and master your emotions and have discipline and follow your rules, you will master the market. All right, I'm off of my soapbox for the day. That's what happens when you have a trading day with no setup. You just kind of sit there and talk. So right now we're kind of stuck here. We tried to break out 72 a few times and it was failed breakout. Now we were stuck in between 65 and 72. Now we're below that. So that's a telling sign. The fact that we're under these major supports is very telling. Telling in that there is a possibility, again I said possibility, not for sure, that we continue on to the downside and we hit these major supports right here, 36 and 33. Which would be good for the market. It would be good for the bulls because we do need to go down to go back up. You gotta learn about liquidity. Where's the liquidity what is the liquidity and where in the market goes to get that liquidity. Trying to figure out how to get my Dom on here. Oh, heck. Click the trade button in the trading panel. Okay. Okay. There we go. Ah, there it is. So what is this? This is called the tape. This allows me to see... Interesting. Some DOMs actually show you how many orders are where. Habibi.
think is the...
Was that your coffee?
Oh, yeah, it's not my coffee. I was gonna say this is apple strawberry.
Nice.
But I put some cinnamon in my coffee.
All right. So, what is the DOM, or the depth of market? So this allows you to show you what price the asset's trading at currently, the bid and the ask. So basically, you have buyers and sellers. So in order to buy, you have to hit the ask button, or the asking price that the sellers are selling it for. And if you want to short or sell, you have to hit the bid price, which is the price that buyers are willing to buy it at. Okay. Looking at like the amount of orders too, so like I think this is the number of contracts on each side. This kind of show you like who's potentially like moving the market at this point. It seems to be about even right now, unless more orders get put in. It would be nice if we actually were able to see like all the contracts here and there. I mean, it doesn't really matter because people can spoof. Spoofing is basically where you put a number of contracts. You can enter in a certain number of contracts at a certain price, and it won't fill until obviously price gets there. But let's say I put in for like 20 contracts to buy it, or I want to sell at 52.61, or I don't know. I guess if you're above, you can. If you're below, you can buy. If you're above, you can short, essentially. So, is price going up, price going down? Okay. So, like, I can put in, like, oh, I want to short 20 contracts at 63.50. Okay. And people can see that. I don't know why we can't see it here, but people can see how many contracts I've placed. And right before it gets there, I could take my order out. So it looks like there's a huge order up there, but then right before it gets to my price, I take it out. That's called spoofing. I don't really use the DOM or the depth of market at all. But in slow action, it does kind of help me gauge like what's going on, like what's the sentiment. Like so far, it's just there's no volatility. It's just chilling. All right. So see, this is what I'm talking about. You can see the volume of orders. So once we get to 64, 65, we got 10,000 orders. And these could be both to buy or sell. Actually, no, these would be to sell, actually. So orders that they would want to short. Because if you do a limit buy, it's going to fill you right now. If you try to limit buy one of these prices above, like right here, it'll fill you at whatever the market price is. So the orders above are to sell or short. Orders below are to buy. If you tried to sell at a price below here, that would be a market sell, and you'd be selling it pretty cheap. If you were to buy above here, where the current price is, you would be buying at an expensive market price. Okay? Basically, you're getting screwed. So that's why there are only sell orders above and only buy orders below. Again, market's just a giant auction between buyers and sellers.
Don't do that.
Yeah, so as you can see, the tape's not really providing much. Although, one thing we can do is we could look at our levels, right? Let's get rid of this for a second. So we could look at our levels. We could see we have 65 and 72 above, 33 and 36 below. Okay? Okay. Let's see on the tape what's going on at those levels. So at 72, you have 1,300 sell orders. 65, you have 10,000 sell orders. Okay, so average number from collectively what it looks like. Let's look at 33. 33 and 36. So 33 is right here. You can't see anything. And 36 can't see anything. So that's unfortunate. Let's extrapolate and see. I mean, there's there's clearly decent volume down. Like, I mean, I want to say decent. Like, there is some volume down there, but is enough to bring the market up? I don't think so. Another tool we could use is volume. Oh no, it's just regular volume. So you have volume right here, which you can see volume is low, or volume profile. So start that. So what's the difference between the two volumes? So volume at the bottom is volume by time. Okay, so it is 8:24 on May 30th. So if we go to our volume candle for today, you can't even see it. Like, it's right here. It's like right above this thing. So this is our volume for today. It's pretty low. Average volume, you want like something like this or like this. Okay, this is below that. So this tells you there's low volume at this time. This is not as helpful as volume by price. Basically telling you, like, at these prices, what is the volume? And you could see volume, again, is pretty average. If we went up a little bit more or down below, there's a little bit more volume at these levels, which would expect us to see some sort of movement. Okay? Again, I don't use these on a daily basis, if at all. I'm just bringing them. I'm just bringing them up to showcase that these are things that can be helpful in your trading if your trade strategy includes some of these things, but it is not necessary to effectively trade. Okay? These are sort of just like things that could potentially point you in a direction. Okay? So as we could see, there's volume down here. pushing us up to over to 65, where there's also volume up here. And if you see our daily bar, it's going up. So that means we're getting volume coming in. This is also why, as a trader, you don't want to front run anything. Yes, maybe you could see volume. Oh, I should get in now. There's a lot of volume. It's going to continue going up. No. If you want to get into a setup, you wait for the setup to present. So my 3 setups are failed breakdowns, sometimes failed breakouts. I don't really do failed breakouts as often. They're a little bit more complex. But failed breakdowns, breakout back tests, so back test entries, like I explained earlier, and then actual breakdowns and breakouts of levels. I'm a little bit more specialized in the breakout piece because there's been a lot of breakout trades the past month, so I've been able to like spot breakouts pretty well. Breakdowns are actually one of the hardest. So to actually catch a short on a breakdown of a zone or a level takes a lot of skill and a lot of screen time. So that's why, like, in breakouts and breakdowns, like actual breakouts and breakdowns, I wait to see price actually breaking or breaking down or out through those levels. In other words, I react. I react to see if price is getting above certain levels. If they are, then I'll get in like 3 or 5 points above the level that broke out or broke down. So front running means you're taking the setup essentially before the setup confirms to you it's a valid setup. I'll explain. In the failed breakdown example, okay? I usually, when the failed breakdown happens and it reverses, I'll get in like 3 to 5 points above the level that's reclaiming or reversing. So like you break down and then the reversal. I'll get in a little bit after the reversal starts to happen, okay? But before that, let's say, okay, I see break down and then it's not continuing, and then it may wick up, but it doesn't necessarily get above the level I'm waiting for it to get above. I'll get in before that level reclaims, thinking that this is going to work, and ergo I front ran my setup. So I didn't fully wait for it to appear, or I didn't wait for it to confirm before I got in, okay? Same thing with breakouts and breakdowns. If this candle gets above here, I'm like, oh, I think this may be a breakout of 65, I can get in right now because I anticipate that 65 will break out, okay? That's front running. Basically getting into your setup before your setup confirms that it's valid, okay? So in this case, this breakout, I won't take this. Honestly, I'm not going to take this even at the reclaim of 65 because we've chopped here all day. My idea is actually at the breakout of not only 72, but at the breakout of this top wick. So 5274, 5274.25, or basically a little bit above this pink line. If we can break above this pink line, then I will get in. Why? Because I'm getting in above the noise. So this is a breakout trade. This is a breakout of 72. I'm not going to front run this by taking an entry below 72 or further, or even right at above 72. So like I won't take it at 73 or 74. I'll likely take it at 75 or 76 if I have to. Again, okay? Because again, these are also major levels up here. So if I'm getting in right here, it's going to suck, but I'm going to at least try to take some position off like here or here. Because these are major levels, and who knows if we're going to reclaim those. That's just an example. Yes. So, is it possible to avoid front running by waiting for the candle to close in a higher time frame? So, the thing with a higher time frame is that it's going to take more time, right? So I'm looking at the 15 minute, right? I'm looking at the 15 minute, and my entry to either get long or short is either at the break of 52.75 or 74, or the break below 52.50, and I'll get in around like 48 or 47, okay? Those are my two entry setups right now. Watching it on the 15 minute, I'm only waiting for 15 minute increments, and I could wait for a candle to either close above 74 or below below 50 or 48 to get in, right? If I look at that on the 4 hour, if I look at that same time frame on the 4 hour, number one, the structure is a little bit more summarized, it's more consolidated. But two, I have to wait for this 4 hour candle to close. And if we're in the middle of the candle like we are right now, it's got 2 hours and 28 minutes. Am I going to wait 2 hours and 28 minutes for this 4 hour candle to close to get into my setup? Absolutely not. Why? It's going to take more time. I can't tell anything right here. If I'm waiting for this candle to close, if I'm waiting for the 4 hour candle to close, I may as well not trade today because this is going to take up all the time. But if I go into the 15 minute, which is a smaller time frame relative to the 4 hour, I see things more finely. It's more fine tuning of the price action. So I can get in earlier because I can see confirmation. Again, close above 74 or close below 50. These are my targets. And we can get there if I'm looking at the 15 minute. Could we get there on the 4 hour? Yes, we can. But it wouldn't be a candle close. It could get there, but that 4 hour candle is not going to close right now. That 4 hour candle is going to close in 2 hours and 28 minutes. I don't want to wait that long, especially if my setup presents. Does that make sense? And it also depends, like, higher time frame relative to what. If 15 minutes for you is a higher time frame than the 5 minutes, yes, that's totally valid because 15 minutes is not as long as a time as 4 hours. But if I'm looking at the 4 hour relative to 15 minute, I'm going to be waiting a long time. And I may even miss the setup. Because it's going to take a longer time for that candle to close. Now you could say the same thing, well, if I'm trading on the 1 minute or the 5 minute, 15 minute is also a long time relative to how quick I usually trade on the 5 or 1 minute. And yes, that's true. Could you miss a setup on the 5 minute or 1 minute? Yes, you could. Or can you miss a setup you usually take on the 5 minute or the 1 minute on the 15 minute? Yes, you could. But the problem is there's a lot of noise on those smaller time frames. Like candles move up and down much quicker or more often on the 1 minute and the 5 minute than on the 15 minute. If I take a specific setup on the 1 minute and then I confirm it on the 15 minute, I'm not going to take my entry on the 15 minute. I'm going to take my entry on the 1 minute because the 15 minute is going to take a longer amount of time for me to see and confirm my setup than if I were to get into the 1 minute. Really, the bigger time frames, you're really just confirming the trend and the structure, the overall structure and the overall trend. That's generally what higher time frames are used for. Smaller time frames are used for entry setups. So now we're back above 65. Again, I said earlier, even if we break above 65, I'm not going to get in. Why? Because this is like a consolidation zone. So what happened here a few minutes, like an hour ago, I expect the same to happen right now. Unless, again, we get a strong break above 72. So that's what's part of my plan. So the plan is wait for the break above 74 to get long. Wait for the break below 48 to get short. And honestly, I could even not take either of those and wait for the fail to 33.36. Wait for it to fail breakdown and reclaim. So that's actually a third entry option, and probably would be a better one. Probably the more high quality one. If it comes down here, fail breaks, and reclaims 36, I'd get in at like 39 or 40 and take it level to level. Exactly. That's why I lean more towards the 4. Yeah, because on a smaller time frame, price can like hit a trend line, and it may fail break it down or fail break it out. But it could do that multiple times on a smaller time frame. So yeah, that's why on the 4 hour it is more reliable, because you know at the close of that candle, like it's been 4 hours, you know at the close of that candle that that's confirmatory. If it closes above or below that trend line, that gives you fuel for like whatever your like fuel for whatever your plan is at that time. It confirms something for you. But again, me personally, I stick with a smaller time frame because that's a long time to wait for confirmation, and once you get the confirmation, it could potentially be too late. But to each his own. Like, if the 4 hour works for you, trade the 4 hour. Sorry. Getting a little toasty. Weather's so good right now. See, look at what's happening. You see that we broke above 65. I couldn't have taken the trade above here. I could have taken at like what, 66 or 67, and then it would have just pulled back. So this is what I'm talking about. You want to look at areas where price has already been, see how it reacts. If it reacted a certain way in prior, likely it's going to react the same way. And again, we didn't flush low enough to actually have a nice liquidity grab, so I don't know if this is going to be enough to really take us up through this area, especially to break out 72 and 74. I don't know if this grab down here was enough liquidity to take us all the way up there. Again, had we flushed below these, maybe even gotten like here, a little bit, whatever, and reclaim back up, that would tell me that it grabbed enough, the market grabbed enough juice to go back up. Right now, I'm just not seeing it. Well, no.
So dramatic.
So that last candle closed below 65, which is probably a good indicator that we may be seeing more downside. I don't know. But it doesn't look good that we closed below it. At least to the upside. I could also be wrong and have this candle go right above it. If we don't get any action by 9, probably call it a day for the stream. I'll still be trading though, but Alright, so we've been stuck under the 65 level for, I mean, a decent portion of the day. We were stuck here from 3 in the morning to about 5:30, and now we've been here from 7 till now, which is almost 9. So the initial break of this level went to 72, failed, broke out, touched 74.25, failed back down. We got as low as 52.60.75, not flushing the prior night low. But now we're back up. We're testing below 65. And we've been here for, again, like I said, a few hours and not rejecting lower, which means this level is undergoing a process called acceptance. Acceptance is when price hangs around under a level for a certain period of time and eventually breaks up through the level. Acceptance is important because it shows that the market is interested in this level and it's trying to drain the supply to potentially go higher. Potentially. No, not always a guarantee. But when you see this, when you see it like, it broke through and now it's coming back up and it's kind of stuck here, that's a good sign that the market is accepting it and is willing to go higher. Potentially. There's always a chance that it just rejects later on. That's why we always just react to the price action and we don't front run setups. Especially with these breakouts and breakdowns, like the real ones, you have to take your time. probably just do a little bit of journaling while I wait. Always keep a journal. Come here. Come here. Very slow day. Very slow day indeed. Oh, Bubble, I'm sorry. You did the splits? Yeah, he's okay. He was sitting in a split. All right. So now, yes, trading is definitely all about exercising patience. Looks like we're, again, still testing that 65 level from underneath. The longer we're under it, the more we break it out. Like, the likelihood increases of us breaking it out, which I think happens right now. That's what it looks like. So I'm gonna go ahead and take. I should just stick to my plan. See right there? You just saw me exercising discipline. I wanted to get in early. I wanted to front run it. But I know how this area is. So that's why I'm waiting until the break of 74. Because we could easily get back up to the 72 level and reject it again. Unless I see strong momentum. If I see strong momentum, I may get in earlier. Yeah, see, the zone between 65 and 72 is sort of whipsawy, so I don't want to participate with that zone if it's going to be that whipsawy. So again, that's why I'm waiting for 72 initially to clear, and then ideally 74 to clear, because then that will be a good confirmation. Again, I could have taken this trade multiple times. I could have gotten in here and gotten, you know, chopped up, or I could have gotten in here and this would have rejected as well. So I would have been in 2 losing trades at this point had I not exercised discipline. Because remember, when this level came back up, I was tempted to get back in to front run the setup. But I stayed disciplined and I stayed on my hands. Because right now I would be in a losing trade. So it's always important to learn when to sit on your hands. Well, first off, you have to have a plan, right? Because without a plan, you don't know where you're going to engage, or you could be mistaken in where you should engage. So have a plan. Look at what the price action is doing. Have a plan around what the price action is doing. And then when your plan triggers, take the trade. If the plan triggers, if the setup presents, take the trade. No hesitation. And if it doesn't work out, you took a good trade. You saw a setup, you saw objective confirmation, you took it, you did everything you're supposed to do. If it doesn't work out at that point, you know, you did what you could, and you should feel proud because you took a solid trade from your setup. But if you think something's going to happen, like, oh, I'm going to get in because I think, then you're setting yourself up for disaster. And we've all done it. I still do it sometimes. I'm trying to get better not do it. But it's something as humans we need to overcome. The I think mentality, or I hope, or I believe this, you know, any sort of like predicting is going to get you into trouble. It should not be I think. It should be I see. I see 74 has reclaimed. I see 72 is broken out. I'm going to get in. I see that this level has broke through. I see that this level has broke out. I see, not I think. That's why trading is different from anything else you'll do. Especially in your, you know, if you guys have jobs or anything like that, it's more so you want to be proactive. Except in trading, you cannot be proactive. You have to be reactive. Sorry, guys. I will be right back.
Apple Cash is an easy, convenient, and secure way to pay your friends because it's already built into your iPhone and lives within Messages. It all happens right in the chat. Then you can spend that money right away with Apple Pay. See? Easy peasy. And way more private than pay apps. Apple Cash. Find it in your Messages today. Services are provided by Green Dot Bank, member FDIC, terms apply. Apple Cash is an easy, convenient, and secure way to pay your friends because it's already built into your iPhone and lives within Messages. It all happens right in the chat. Then you can spend that money right away with Apple Pay. See? Easy peasy. And way more private than pay apps. Apple Cash. Find it in your Messages today. Services are provided by Green Dot Bank, member FDIC, terms apply.
We seem to be getting the push slowly but surely. Again, very slow day. Not going to force anything. Alright, got my journaling done for yesterday's trades. Today may not be much to journal, honestly. Although you should always find things to journal. I was just testing out another account. All right. See, this is exactly why I didn't want to get in at the break or reclaim of 65. Look at what it's doing. It's literally just chopping around, just like it did right here. That's why you always go with your plan. Always go with your instincts. The only thing you'll be able to trust in trading is yourself. And the screen time that you put in will give you that experience. Alright guys, I may call this at 9:30. So 2 minutes. Just not much happening. Very clear trend line you can see right here. See? Rejecting again. And that, ladies and gentlemen, is why you stick to your plan. Another trend line right here. Hopefully. This is sort of like a rising channel structure. Rising channel, slight megaphone. It could also be a triangle. Or a wedge. I guess technically a wedge. Triangle, wedge, same difference. And we all know the bias for a wedge. Wedges have a 60% breakout bias. breakouts. No worries. Not yet. Still above 65. Still kind of chopping between 65 and 72. We drew some structures on the chart here. We have a rising channel and a wedge pattern. And as we all know, some of us know, the wedge has a 60% break up bias. So 60% of the time these structures tend to break up. And obviously the other 40 they break down. Now, granted we've been in a downtrend, like on a micro time frame, we've been objectively in a downtrend. The macro trend is still up, but the micro trend is down. So what does that mean? With these structures, you do kind of have to go with the trend. Now, which trend is that? Is it the macro trend or the micro trend? Ideally, the micro trend until something changes. This could be a reversal, for all we know, going back into the macro uptrend. Because in the macro sense, we're in an uptrend. In the micro sense, we're in a downtrend. And it's important to distinguish those two. So right now, this structure, has a 60% break up bias, but given that we're in a micro downtrend, it's possible that it may have more of a bias to the downside. But we'll see. The ultimate resolution of the structure will be up to the price action. We are wedged in there.
It's 135.
Okay. Anyways, guys, it's been real. Have a good rest of your trading day. I'll see y'all soon.